There are so many misconceptions about tax in today's day and age. Despite having access to the internet, it drives me insane. Oftentimes, many people believe that if they do XYZ act or something, they suddenly get taxed more. Or if they climb a tax bracket, they're just going to pay exuberant amounts of tax for no reason whatsoever. In this video, I'm dispelling a lot of common tax misconceptions and myths that I've come across. So in order for you to get educated and realize that the tax system isn't really there to go against you. But aside from that debate, let's carry on. The first misconception that drives me utterly insane is when people say that if they suddenly climb a tax bracket, they're going to pay exuberant amount of fees in taxes, which is ridiculous. Like most countries in the world, Australia operates on a marginal tax system, meaning your tax will steadily increase. It will be incremental and steadily increase, not just suddenly just go from 0 to like 100. And if I show you the tax rate for the financial year of 2022 and 2023, you can see that if you earn below 18,200, you pay nil income on tax, which hasn't changed too much. And if you earn between 18,201 to 45,000, you pay 19 cents for each dollar over 18,200. So effectively 19%. And if you're earning between 45,000 to 120,000, you'll pay 5,092 plus 32.5 cents for each dollar over 45,000. So what it simply does is it just adds the previous bracket's amount, which you would have been maxed out. So 5,092 is simply if you had maxed out that previous bracket. You're not suddenly just paying more. You're not suddenly just paying 32.5% for each dollar earned. It's only above 45,000. And that's the thing that trips on most people. They think they have to pay that for all their dollars. No, it's only above 45,000 or whatever your tax bracket is. This myth has been driving me insane out of all of them, because I was wondering, why would anyone work a high paying job or incrementally improve themselves so they get paid more and more if you're just going to pay more in tax? You know, it's ridiculous. And funnily enough, there was a statistic, which I should put up on screen, from the ATO where a lot of people claim deductions when they jump tax brackets, which is quite interesting. So it sort of feeds into this mentality or mindset. The second misconception about tax, which is one of my favorite ones, is when people say, deduct this, deduct that, just deduct it for the sake of deducting it. Like, for instance, I knew someone who had deducted a laptop. Even as a PAYG, there was some allowed, and they basically deducted a gaming chair and a laptop. And they thought essentially the taxman paid for all of it. No, it doesn't work for that. You don't get all the money you spend. So don't think of it as a free gift from the taxman, because it's not. If you're around if you're paying 35% in like tax roughly in that bracket, 32.5, you will get 32.5% back, right? A little bit here and there, not the exact numbers, but around about that range. That means you're effectively paying 70% for that item, and the taxman is paying 32.5%. And in an example, I'll show you who it may be beneficial to, so stay tuned. Like I was just mentioning, this is really favorable for people who are paying a lot in tax. So especially people that are paying 180K and above, because their marginal tax rate is 45%, which is almost half, and it's insane. And that's excluding Medicare levy. If they're paying Medicare levy as well, that's 47%. So effectively, for $1, the taxman pays 47% and you pay 53%, which is a lot better. And it's not surprising that most of these people, most of these professionals decide to negative gear, because they're getting such good opportunities that you wouldn't necessarily get, because the taxman, since you're in a lower tax bracket, the taxman is only paying a portion, whereas you're incurring most of the fees. To illustrate this example, let's say you have a tax deductible subscription. Let's say you're like a journalist and maybe for the news or something. Let's just say that. If you earn below 18,200, you didn't pay any tax. So obviously you can't deduct anything. However, like I iterated with the example before, if you earn above 180K, you can deduct 47%. And you're paying like almost half. So half the taxman's paying, half you're paying. But if you're someone like in the middle tax range, which I believe most people would be between 45K to 120K, that's around 32.5%. Speak to obviously a tax accountant, but it's around about that range effectively. So you're still forking a huge amount. So what a lot of people recommend, especially tax accountants and just people in general, is that don't get it if you don't need it. Because you got to remember, you are paying for the majority of it. Sure, if it helps for income producing purpose and you can see it bring more revenue in, then yes. Otherwise, if it doesn't bring any money in, you've effectively just paid 70% and you got like a 30% sort of discount, which is not worthwhile whatsoever. Another interesting thing with this, which I thought I'd bring up, is how people purchase properties through like either a company or a self-managed super fund. In a company, the general tax rate is around 25%, sometimes 27.5%, but let's go at 27.5%, right? So the taxman would be forking out 27.5%. Whereas let's say you got a property through a self-managed super fund, the tax rate is 15%. So effectively you'd be paying for 85%, right? And 15% would be coming from the taxman. So many people don't consider this. And at the same time, if you weren't aware of this and it's prompted you to effectively think more and research more, please hit like. It truly helps me out. But comment below if you didn't know this. I'd like to hear your responses. The third misconception I have for you guys is essentially the idea that you get taxed more if you work overtime. So in a sense, yes, you're earning more income, but you really don't get taxed more like I iterated before. The ATO withhold more money simply. That's what they do. And many people confuse that with paying more money in tax, because if at the end of the financial year your income is less than what they expected, you'll get that amount refunded. That's how it works. They just withhold it for extra, I guess, cushioning in case you don't have enough by the end of the financial year. So that's why they withhold more tax, but you will get it by the end of, or basically when you submit your tax return. So that's something you shouldn't worry about, because Australia has a marginal tax system. So remember that it's steadily increasing income. So if they just withhold a little bit more, they will return it. So the next misconception, which is technically the fourth one, I'm giving you guys a bonus, is the idea that people have that if you get a second job, you pay more tax. Yes, that is technically true, like I alluded before. The reason why you pay more tax is because you don't claim the tax-free threshold, which you would do in your primary job. So essentially the ATO withholds more money, effectively. So you are being taxed or withheld more money, but like I iterated before, if your taxable income is still below what you're supposed to pay, they will refund you more money, effectively, because we still are a marginal tax system. There have been studies and I've seen examples of people that they claimed the tax-free threshold on both jobs. Well, you technically can, but most people recommend you don't. The reason for that is effectively because you have to save money to pay towards a taxman at the end of the year. So that's another avenue you can do. But like I said, please pursue a tax accountant for that, because in that scenario, I guess you're getting the money up front rather than like just getting it towards the end of the refund. So you can use that money more effectively rather than wait for it to come back and effectively build on it. Like I said, speak with a tax accountant on that. The next misconception that many people get, I guess, confused with is that they think they can claim a tax deduction for almost everything. There has to be a strong link and a correlation between the amount of income you're generating related to that expense. So for instance, if let's say I got a camera for my YouTube channel, I'm earning a bit of money, I can sort of write that off and claim that as a deduction, right? Because this camera is helping me produce videos which will produce income. So it has to be strongly linked. And the problem most people have is that as a pay-as-you-go, as a pay-as-you-go employee, you don't have that much power compared to like an ABN or a company in general. They're able to deduct more things, whereas you can't. It has to be strongly linked, because I've heard people try and like link their cars, travel to work. Like you can't do that as an employee. Maybe if your work from home, like predominantly, like 100% of the time you're fully remote, but due to work you have to leave. So there has to be a strong reason, not like a half-assed reason. And trust me, you do not want to mess with the ATO for a little bit of money, because they will go down on you very hard. So that's another misconception. So these are some of the common tax misconceptions that I run into like almost on a daily basis. I've heard this from my friends or family, and it just drives me insane. And I thought it'd be worth pointing this out, because we're all gonna pay taxes, so why not know about this, right? If you enjoyed the video, please make sure to hit like, hit subscribe, and comment below what you learned and how you're going to use that information. But aside from that, thank you for watching this video. I hope you have a great year and truly make this worthwhile. Bye.